Welcome back. Well, China's COVID zero strategy has caused economic growth to slump in March, with consumer spending, property prices and exports all falling. Joining me now is our business reporter, Edward Boyd. Ed, economic growth was noticeably weaker in March and is expected to deteriorate further into April.
Yeah, it's not looking good for China's economy at the moment, Laura. A lot of it's to do with that COVID zero strategy that China have really been following for the last 2 years. And obviously with Shanghai locked down with 27 million people and the lockdown, I believe, in its third week now and continuing to go on, it's having a big impact on China's economy. So overall, the economy grew in the 3 months to March. However, the month of March itself, it looks like China's economy may have gone backwards. With 27 million people locked down in Shanghai, their ports closed, factories shut, highways closed. Retail sales fell 3.5% during March. Unemployment rate in China's lifted to 5.8%. That's the highest level since May 2020. And home sales or property sales by value dropped 26% year on year to the end of March. So there's some worrying signs here for China's economy as it continues to pursue this COVID zero strategy. We've just had the March quarter. We're into the second quarter of the year now for China. And if they continue with this COVID zero strategy, they might not be finishing the year in a positive way. They may actually start to fall into a little bit of a recession here, Laura. That's the fear.
Right, and obviously that has global ramifications, particularly for us here in Australia.
Definitely. Look, they're our biggest customer for iron ore. They buy a lot of coal as well. So China's economic growth really impacts everybody. So if they stop buying things, they start to shut up shop, it's going to impact us, and it'll impact a bunch of other countries around the world too. So
did the market like it when it opened this morning? How's it looking?
Hey, the market was expected to open slightly higher. It's actually raced out of the blocks. It's up about 0.7% in early trade. Energy companies doing well. Oil prices climbed overnight, and that's because Libya has closed its largest oil field due to some protesters who apparently want the Prime Minister of Libya to resign. So when the supply gets tight of anything at all, the price goes up. So oil prices are up to $113 a barrel. The other thing that's happened this morning is 10-year government bond yields for Australian government bonds are up above 3% again. So when bond yields rise, investors are selling bonds and they're moving into other things like shares. That's a sign, Laura, that interest rates are going up this year. We know the Reserve Bank's expected to lift rates in June, so just about a month away now.
Okay, Ed, we'll speak soon. Thanks so much.